Most of us have some sort of pension fund, right? Or at least we've heard about things like unit trusts. But have you ever actually stopped to think about who's managing all that money? Well, today, we're going to take a guided tour of Malaysia's fund management industry. We are pulling back the curtain to see how this absolutely massive financial engine works, and, more importantly, why it's so critical to your own financial future.
I mean, think about it. It's a question that affects millions of us. You see that deduction from your payslip every month for EPF, or maybe an advisor talks to you about unit trusts. But what happens next? Where does that money actually go? Who is making the big decisions with your hard-earned cash? That is exactly what we are going to unpack today.
All right, so to make sense of it all, we've broken down our tour into 5 key stops. First, we'll cover the basics. What even is fund management? Then we'll look at the rules of the game. After that, we'll meet the key players, explore how the funds are actually built, and finally, we'll connect all the dots to see why this industry matters so much. Let's get started.
Okay, our first stop is the Welcome Center. Before we dive any deeper, let's just get a really clear, simple foundation. What exactly is fund management? At its core, it's actually a pretty simple idea. You're basically hiring a professional to manage your investments for you. They take your money, pool it with money from a bunch of other people, and then build what's called a portfolio, which is just a fancy word for a collection of different assets, like stocks, bonds, maybe some property. So instead of you having to do all the homework, you're trusting an expert whose full-time job is to make that money grow. So what does a fund manager actually do all day? Well, think of them as financial architects. Their job is to design and manage these investment portfolios, oversee these massive pools of money like pension funds, and operate collective schemes like unit trusts. They're the ones building and maintaining the financial structures where our savings get to live and hopefully grow.
Let's move on. As you can probably imagine, an industry that's handling billions of ringgits of other people's money can't just be a free-for-all, right? There have to be strict rules of the game. So our next stop is all about understanding those regulations.
And this brings us to the single most important rule of the game. You can't just wake up one morning, print some business cards, and call yourself a fund manager. To operate legally in Malaysia, you need official approval. And this isn't just about red tape. It's an absolutely critical safeguard to protect all of us from fraud and bad actors. The key law here is the Capital Markets and Services Act of 2007. This law says that any company managing funds needs to hold a very specific license, a Capital Markets Services License, or CMSL for short. And the powerful body that hands out this license and watches over the entire industry, that's the Securities Commission Malaysia. Think of them as the ultimate gatekeepers, the ones who decide who gets to play.
But, like with any set of rules, there are some exceptions. The law gets that not all fund management involves the public's money. For example, if a big corporation is just managing money for its own subsidiary or an insurance company is managing its own funds to cover its policies, well, they operate under slightly different rules. It's a smart distinction. It shows the regulations are really designed to protect public investors first and foremost. All right, so we know what fund management is, and we know the rules that govern it. Now, let's meet the people and the institutions that actually make up this world. On this part of our tour, it's time to meet the locals, the industry's key players. You see, the industry isn't just one thing. It's a whole dynamic ecosystem. You've got investors and companies on one side providing the money. Then you have the fund managers on what's called the buy side. Their job is to buy assets and put that money to work. And sitting in the middle, you often have investment banks helping everything connect. It's a totally codependent relationship. Each part really needs the others to function. And the players themselves are incredibly diverse. I mean, you've got the big household names everyone knows: banks, insurance companies, the major unit trust firms. But the landscape is changing. We're seeing more specialized stockbrokers get in the game. And maybe most interestingly, we're seeing the rise of 2 very different groups: these small, nimble boutique firms and the huge global foreign managers. This rise of boutique firms is a really fascinating trend. These are often started by star managers who decide to leave a big institution and build their own company from scratch. Because they're smaller and the bosses are also the owners, they can be a lot more agile and specialized, and that brings a whole new flavor of competition and innovation to a market that used to be dominated by just the giants. Okay, now for the main event. We've met the players, so let's look at what they're actually managing. This section is all about the main attractions of our tour, the different structures they use to pool and invest our money.
So, broadly speaking, you can split all these funds into two major buckets. On one side, you have the absolute giants, the provident and pension funds. These are massive institutional pools for retirement. EPF is the perfect example. And on the other side, you have unit trusts, which are specifically designed to pool the savings of lots of smaller individual investors, like you and me.
These pension funds are literally the bedrock of retirement savings for millions of people. They're legally held in a trust, and the trustees have this enormous responsibility to protect and grow that money. It's such a big job, in fact, that they often hire external expert fund management companies to manage different parts of the portfolio for them. Now, the structure of a unit trust. This is a brilliant system of checks and balances. It involves three key parties. First, you've got us, the investors or unit holders. We're the ones putting in the money. Second, you have the fund manager who makes all the investment decisions. And third, and this part is so important, you have an independent trustee whose only job is to hold on to the assets and make sure the investors' interests are protected. A really important and fast-growing category here in Malaysia is Sharia funds. Now, these work a lot like regular unit trusts, but with one huge difference. Every single investment has to be compliant with Islamic principles. This is all overseen by the Sharia Advisory Council, which makes sure the fund avoids things like riba or industries that aren't halal. All right, we are on the final leg of our tour. We've seen the what, the how, and the who. But now it's time for the most important question of all. So what? Why does any of this matter? Let's talk about the big takeaways.
On a national level, the impact is just immense. This industry takes millions of individual savings accounts and mobilizes them into this incredibly powerful source of long-term capital. That capital is what funds huge infrastructure projects, fuels economic growth, and really helps build up Malaysia's reputation as a key financial center in the region.
The industry also makes our entire financial market healthier and more robust. It drives innovation, creating new and more advanced investment products. It deepens really important markets like our bond market, and it builds a strong foundation of local, long-term investors. And that's crucial because it makes our whole economy less shaky and less reliant on foreign money. And finally, let's bring it all back home. What does this mean for us as individual investors? This is the bottom line. It gives us a powerful alternative to just letting our savings sit in a bank account. We get access to professional management and, this is the magic word, affordable diversification. By pooling our money with thousands of others, we can own a tiny piece of many, many different companies, something that would be practically impossible to do on our own. That is the power of economies of scale, right there. So, we'll end our tour with a question to think about for the future. Now that you know how it all works, as these nimble boutique firms and giant foreign managers become bigger players, how is the whole industry going to change? Will it mean more innovative products for us, better returns, lower fees, or will it just make everything more complex? It's a dynamic space, and it's definitely one to watch. Thanks for joining this explainer.